All right, today in Hot Picks, we're taking a look at the luxury sector. Let's bring in Ric Palombi, Senior Portfolio Manager of International Equities and Alternative Income at CWB Wealth. Ric, thank you so much for being with us. Before we get into your picks,
great to be here.
Let's talk macro. How do you go about picking luxury stocks in this environment where it seems like we're concerned about the consumer, even the high end? You know, we've had some high profile warnings from other high end luxury makers.
Yeah, it's a great question. I mean, obviously, you know, we've had high inflation with high interest rates and also geopolitical events. So, you know, that leads to some, you know, structural normalization in the luxury space. But what we look for is sort of longer term opportunities in companies that have tremendous brand equity that we believe can withstand the cyclicality of it, to be structural winners as we move through and get into the next phase, obviously, of, you know, whenever the Fed and the rest of the central banks start cutting and we get into sort of this other virtuous cycle moving forward. So, you know, for us, it's about the brand and how they protect the brand and growing their share. And that's the way we look at it. So we take this opportunity for the cyclical downturn to take advantage of that and get into some tremendous companies that have huge upside in our estimation.
Okay, let's get into some of these names. A play on cognac, which I like, Richemont and Prada. So you got to get out of North America for these plays. The cognac play, Remy Cointreau, is interesting. Is that one that you think not only does well if there's sort of a general downdraft, but is experiencing sort of structural growth?
Yeah, I mean, you know, it is a long-term play on cognac. Cognac has a scarcity value. The company's been around for over 100 years, so it's seen this cyclicality. It's currently weak because of demand normalization, particularly in the U.S. And the debate here is it a cyclical issue or a structural issue? Because tequila has been taking some share, but we believe that losses there are moderating, and that, you know, from a cyclicality standpoint, the Remy and cognac should do better. So we see this as a cyclical play, and that, you know, depletion trends are starting to move in the cognac's favor, and it has a tremendous balance sheet, tremendous track record. So we expect margins to improve. They set some 2030 targets that they still have in place. So we expect margins to improve from, you know, low 20s into the 30s, and that provides, you know, anywhere from 35 to 70% upside here, given the sell-off in the stock because of this interplay with the U.S. consumer and the tequila issue that we view as cyclical.
Oh, interesting. Okay, so your second pick is a Richemont, high-end jewelry, things like watches and other accessories. This one has also struggled, though it has kind of perked up in the last month or two.
Yeah, it's a structural play on sort of the fastest growing segment of the luxury market, which is the high-end jewelry. So the way we look at it is, you know, it has some of the best brands in the jewelry space, which is Cartier and Van Cleef. And obviously those have struggled because of, again, normalization demand in the West and a sluggish China recovery. But we believe that's more than factored into the price. In fact, if you look at sort of the sum of the parts at these levels, basically you're paying for Cartier, but you're getting the rest of the company for free, basically. So, you know, on a relative basis, you know, compared to other peers and sort of how other luxury companies have been raising prices, we think the interplay between, say, buying a high-end purse or starting to buy more jewelry, that's now, I think, swung into Richemont's favor. And so as the demand, and as we see the demand pick up, it's in a very, very good position to take share and really grow their business.
I'm glad that you brought up the China component, because certainly that does affect, you know, a Richemont, but also a Prada, which is your third pick, another one. All of these have kind of similar charts when it comes to how they performed in 2023. Yes. I imagine China's a large part of that story too.
Yeah, I mean, for Prada, it's a luxury play. Obviously, it's a turnaround play within the luxury segment. You know, we feel it has great, strong brand momentum in this quiet luxury space. They've been able to increase prices, which has certainly helped their EBIT margins, and we continue to see that accelerating through the cycle. You know, for example, on their flagship kind of Galleria purse, they've increased prices 25% since 2021. We think those prices stick, and that you know, they're with their new co-creative directors, Raf Simons and obviously Miuccia Prada, who's been there for a long time. They've done a great job in reducing wholesale, increasing their retail exposure, keeping those prices moving in what we believe in the right direction, obviously higher, improving operating margins, which is still 15% below, say, Louis Vuitton, for example. And we think if that happens, we have here, you know, 60% to over 100% upside as we move through the cycle in Prada.
I didn't appreciate how large Prada was in terms of market cap. I was going to ask if it's a consolidation candidate, but at that size, seems unlikely.
Well, I mean, I think it would be. I mean, it's really closely held by obviously Miuccia Prada and the family. So I think any company like a Louis would certainly have opportunity to buy them, but I'm pretty sure it's not for sale.